Good morning, everyone, and thank you very much for joining the morning market review. Today, we actually running slightly late, 2 hours late. I just had some technical issues this morning. Anyways, thank you very much for joining. My name is Russell Shaw. I'm a senior market specialist. Today is the 17th of January. I'm just going to go ahead, bring up some disclaimers, and we'll start off with the high risk investment warning. I'll keep this on screen for a few moments. Okay, and I think another few moments just for you to take a read through that. And all right, let's go through to the market commentaries disclaimer. If you can just have a quick read through that as well, please. All right, so just some things to note before we get on with the technical analysis. In terms of the ECB, there has been some comments that investors may be too hopeful when it comes to rate cuts. We've certainly seen similar sentiment to that by Governing Council member Robert Holtzman. China is battling with deflationary pressures, is battling with a property crisis. So it's facing major challenges. So that's something that's worth just keeping in mind. Data released today did present a mixed bag for the world's second largest economy. In terms of the Red Sea conflict, Iran isn't yet restocking Houthi rebels with weapons after the US and UK airstrikes in Yemen last week, and that's what Western officials are saying. And Apple's iPhone has dethroned Samsung devices, becoming the best-selling smartphones over the course of 2023. And that's the first time that Samsung has lost that position since 2010. Since 2010. All right. With all that said and done, let's go through to our chart. We'll do some technical analysis. We'll start off with, in the top chart here, we've got the real rate. And, this is, and certainly it looks like rates are coming down. So you can see that in the top chart, the rate goes up over here, and then it comes down there. The bottom chart's the dollar. You can see that there's a positive correlation. As the real rate has moved up, so as the dollar moves up, and as the real rate has come down, so has the US dollar come down. Now, something that we just want to bring to your attention is that it looks as if the fits in with the expectation. I think this is probably the best way to draw it, right? So here's the neckline. And if that's the neckline, let me just adjust it. Then we have the left shoulder over here. So let's just put that in, left shoulder. We've got the head. And I don't think a target, I don't think a price target or a measured move here is going to help us. What I think that the takeaway is that there's a topping pattern. And I think that topping pattern makes complete sense when we talk about market expectations for the rates to come down. So we're looking effectively for a break below the neckline, aren't we? And if we get a break below in the neckline, one would expect that the dollar should follow. But there's a little bit of tug of war, so to speak, on the right shoulder at the moment. So let's just take out the drawings, and let's just focus. Let's zoom in on the right shoulder. And there is some movement at the moment up in the in the yield, potentially a crossover here in the moving averages. The idea here is, in my opinion, this is sort of short-term in nature. It's feeling a little painful at the moment because the dollar is moving up, and the dollar is a safe haven. So if the dollar moves up, it means money is going into a safe haven, and if money is going into a safe haven, well, then we're having a risk-off type of start to 2024. I think, again, that makes sense. We had a big run-up towards the end of 2023, the so-called Santa rally, and a lot of profits being booked now. But I think that if we just focus on the longer term, and if this head and shoulders does actually prove to be meaningful, then the short-term movements become important because we can potentially try and exploit them. But that's of course assuming that the longer term picture plays out. The longer term picture has to play out. So if we've got the breakdown in the head and shoulders here, well, then what we should be doing is we should be looking for rallies in the downtrend. Okay, so here's the US dollar is moving down. Here's the rally. So potentially this rally in the downtrend is something that is exploitable. And what we'd like to do, if we just go through, say, to the daily chart, and I'll share the daily chart with you now. Right, let me just change this up. This is the DAX. I don't want to be looking at the dollar. Okay, so the US dollar is in what we call zone 1. It's effectively the bullish area. But again, if we're looking at a longer term play on interest rates here, then we've got some resistance above us. This is around the, let me just change the labeling here. Yeah. Okay, there we go. So we kind of at 12,957, and this is on the FXCM US dollar basket. So if we go kind of towards 13,000, we've got that overhead resistance there, and I just wonder if the dollar starts being influenced now by the overhead resistance. If, and this is the big deal here, if the market starts pricing in those lower rates again. Right now, there's about a 70% chance that, or the market expects a 70%. There's a 70% probability, according to the market, give or take a couple of percentage points there, that the first rate cut will come in March. Okay, if that gets pushed back, yeah, then we'll probably see dollar appreciate a bit more. But I think that 70% pretty strong probability there. I think that the fact that dollar is moving up here gives us a potential opportunity, gives us that rally in a downtrend. Well, if we've got a rally in a downtrend on the safe haven, then we've got potentially dips, one would suppose, in uptrends on the risk assets. So let's go through to, we did have DAX up. And just we'll use the FXCM CFD here. It's pulling back. It's pulling back in. It's in zone 3. But if you take a look at, say, a longer-term chart of exponential moving average as support, there's actually a support level round about here. We've actually got a thick band of support all there. Okay, so we've got this underlying support. We've got price above that 30-week exponential moving average, a 30-week exponential moving average pointing up. So if we use the exponential moving average as a filter, as a trend filter, it's pointing up. Well, okay, if, and we're talking about a longer term playing out of pattern here, if the real rate completes a topping pattern, then any sort of pullbacks in the risk assets or any rallies in the havens potentially become exploitable. They need to be on the watch list, right? So if we go perhaps say down to the hourly chart, what we can do on the hourly chart is we can start looking for timing opportunities. And I'll just bring up the hourly. Is we haven't seen that yet. Okay, so it's more of a waiting game now, but we can potentially look for some sort of cross, some sort of golden cross in the moving average here. What we would also need is we would need to get the stochastic to move from what we call the lower quintile. We'll need to get it up to the upper quintile. The upper quintile, the stochastic is a momentum indicator. In my opinion, it's the best indicator, but of course, it's subject to opinion, right? But the idea is if we get the stochastic moving from the low quintile through to the upper quintile, and we get a golden cross or a bullish crossover in the EMAs, then we've potentially got that dip in the uptrend playing out. So you can see it all comes back. Okay, it all comes back to this chart over here, the real rate. Okay, and again, just to reiterate, the real rate to me looks as if there's a top pattern. Again, I know this is getting repetitive, but it's that important. Okay, because I think it's a key driver of the market. You've got the left shoulder, you've got the head, and now we're just waiting for that right shoulder to complete. But as we said, there's a tug of war on that right shoulder, and the real rate's moving up, and that's because we are in a risk-off environment. Okay. Let's just take a look at a few other risk instruments, potentially looking for that dip in the downtrend. See if there's that exploitable dip in the downtrend. Let's go NASDAQ. Let's see what's happening on NASDAQ. And we'll do a top-down analysis here. So let's just bring up NASDAQ. Okay, and we'll start off with the weekly chart. All right, just sharing the screen with you now. This is NASDAQ. That NASDAQ is above its 30-week exponential moving average, and that 30 again using the moving average as a trend filter, that it's pointing up. It's telling us that the 50, okay, as long as it stays above 50, and as long as there is an upward trajectory in that EMA, well, pullbacks have got to be compelling. Okay, let's go through to the NASDAQ. Let's go through to the NASDAQ daily chart and see if there is anything we can glean from the daily chart, right? So let me just share that tab with you. Okay, so this is the daily chart. We're in what we call zone 2. That's between the two blue bands. That's the neutral area. We want NASDAQ to move into the bullish area. That's between the upper blue and the upper red. So if we can get a movement upwards, that's relative strength right there. And the way that we can try and time that is we can go down to the hourly and look at our indicators. So what we can do is, this is the hourly chart right here. And what we can do is we can look for a bullish cross of the EMAs. So that would be signal 1. And then we would want the stochastic to move from what we call the lower quintile, must move to the upper quintile. So that would then suggest that there's an underlying bullish momentum. So if there's that underlying bullish momentum, then we've got the dip in the uptrend. Then we have that dip in the uptrend that we're talking about there. Again, what we can do is look at S&P. Let's take a look at S&P. Again, I think that the top-down analysis here is going to suit us quite well as well. So let's just go to the SPX 500. We'll use the FXCM CFD. All right, I'm just going to share that chart with you. So now we're looking at the S&P 500. Okay. And I can ask you questions. Where are we relative to the exponential moving average? We're above it. We're bullishly above it. Okay. What direction is the moving average pointing? It's pointing up. Where is the RSI relative to 50? It's above 50. That's all bullish. Okay. So any sort of pullbacks, any dips on the S&P must be thought of potential opportunities. And then what we can do is we can go down to the daily chart and just look for synchronization, some cooperation between the daily time frame and the weekly time frame. That's what's missing at the moment, is this cooperation between the time frames. So if we go down to the daily frame, again, we're in the neutral area. We're between the two blue bands. So we want the SPX to cross into zone 1 between the upper blue and the upper red. That's the bullish area. Okay. We also want the RSI to remain above 50. Okay. If it drops below 50, that's a bad technical signal. It suggests that the momentum is dropping. So we want to stay above 50. And again, the way that I would try and time that is I would go down to the hourly chart, and I would look specifically for the EMAs to start showing some sort of bullish movement up. So I want to see a bullish cross here. I want to see the stochastic move from the lower quintile to the upper quintile. So we've got here this dip in the uptrend. It's a potential opportunity. How do we know it's a potential opportunity? Because we've got that topping pattern on the real rate, and the weekly time frame is positive. So if the weekly time frame is positive, anything on the lower time frame that's showing pullbacks is potentially exploitable. And that's exactly what we want to look at. Let's take a look at one more. So the SPX 500 is a market capitalization index, and is driven by certain stocks, the Magnificent Seven, etc., the top market capitalizations, etc., all have a huge influence. Let's go to what we call the RSP. Okay, so the RSP is it's an equal weighted ETF of the S&P 500. Okay, and what we can see here is there's actually a nice, beautiful support area right here. Nice, beautiful support area. Again, what I'd like to see, and if this happens, because I don't know if this, I'd like to see the RSP move into the upper quintile. We move to that upper quintile, we get that bullish movement. Well, then it's not just the Magnificent Seven. It's not the top market cap stocks that are moving the market. Then the market's moving nicely with good, what we call breadth, right? Let's just take a look at the RSP on a longer term basis. What's the underlying trend of the RSP? And we'll go through to the weekly chart here. It's looking good. Where's it positioned relative to the exponential moving average? It's above the exponential moving average. What direction is the exponential moving average pointing? It's pointing up. That's bullish. Where is the RSP's RSI relative to 50? It's above 50. That's on the bullish side of the indicator. You can see that we're having some sort of pullback here. Well, I think that is a potential opportunity. If we see the resistance turn support come in here, we may, and this really would be first prize, we may see a nice bounce here. So I think there is opportunity that's building. There is opportunity that's building. So that's as far as we're going to go today. I apologize that we are 2 hours late. As I say, I had a technical issue. We'll do this again tomorrow, but it will be at 7:40 GMT as opposed to 9:40 GMT. If there's any questions, just go ahead and type those into the live chat. Any questions, go into the live chat, and I will be happy to answer them to the best of my ability. I'll just wait a few seconds. All right, nothing coming through. So what we can do is we can end the webinar here. Let's end the webinar here. Have a really good day ahead. Good evening. Looking forward to chatting with you tomorrow morning. Thanks very much.